Question of the morning. You've seen the news and you've also seen where the stock already sits, Tim. Does it make sense to buy in from here?
Well, certainly the valuation is not at some sort of stretched multiple where we're really concerned that Apple is overvalued. At the same time, every time there's a supplier discussion surrounding Apple, it's either that they're cutting production or raising production, and nobody has a really good view as to what the supply chain is doing for Apple, where they're moving orders, where they're increasing orders. So we're not going to run out and buy it based on this news, but we're pretty happy to see Apple get a reasonable multiple.
When do you think we're going to get to a point where all this hardware news is actually old news, which is to say that Tim Cook's strategy of turning itself largely into a services company, I don't know if you think that's even possible ultimately, but if he is successful, that we won't be talking in the same way about, what suppliers are saying this month or that month?
I think, Andrew, we're probably 2 or 3 years out from a ubiquitous 5G world where more and more and more services will be available, and things like the iPhone will be our window into those services. And that's really when you get a chance to see revenue from Apple and earnings from Apple be less than 50% iPhone.
So what are those?
That really will be a time.
So when you say 2 or 3 years out, you think about 5G and that happens. What are the services you think that are going to come that we don't know about now?
Well, you've seen little instances of it. You're seeing Apple get into broadcast media. You're seeing Apple get into a more robust online gaming platform. Then you're going to move into transportation. You're going to move into your information, those things that you have a digital license to, following you wherever you are. So it's hard to say what devices are going to have a 5, 7, 9-inch screen in them.
But Tim, the issue historically has been that Apple has made all of the hardware, right? That's always been part of it. And we're seeing a shift in that strategy in the TV business, in that they're going to be on Roku and everybody else's service. Well, we don't know if they're going to be on the Amazon service, but the Amazon TV service, right? Those Amazon boxes they said on Friday may not have it. But how does that sort of play itself out, and therefore how important is the entire hardware ecosystem long term?
Well, I think that you've hit the nail on the head, and that Apple has enjoyed incredibly high margins on all the hardware, and it's been a profit driver. They've got to make sure that as they roll out these other services that they're profitable. A lot of other services are out there that are not, but if you look at the watch, you look at AirPods, you look at all the other ways that they're trying to make sure that they wrap you into the ecosphere, I don't see it really being a hard thing for Apple to make plenty of margin on whatever device it is that you're going to access that content.
If you weren't going to buy Apple, what else would you buy in tech land?
Well, in Techland, there's a lot of cheap stocks. If you look at Intel, 11, 12 times earnings. If you look at the semiconductor capital equipment space, they're trading in the mid-teens on earnings. These are pretty low valuations for companies that are at the forefront of what's going on. It's been 25 years that technology has really become a consumer staple, yet we still only have a handful of manufacturers in semiconductors and capital equipment that drive the market.
Make the case for Intel, though, at this point, because, I've heard as many bears out there as I have bulls these days.
Right. Well, certainly the bear case against Intel had been that they were slow to thinner chips. AMD had a technology advantage on them. And the thought was that AMD was going to be able to take the most profitable server business away from Intel. Then suddenly AMD ran into some production issues and yield issues on their thin chip. So it is not easy to make semiconductors. It takes a lot of capital and it takes a lot of experience. So at 11 or 12 times earnings, it's hard to really bet against an Intel being part of what's going on. And they've spent a lot of money over the last 10 years on their equipment.
Interestingly, you seem to like hardware. Why do you like hardware? Is there a tech services company you like?
Well, I guess if you look at Microsoft, which we've owned for some time, that's mostly now a services company. It's always been a software company. They actually are pushing more towards hardware. I think what we're looking at is in a data security world, people are really trying to vertically integrate their product sphere the way that Apple has. So as they all move towards that, there's still probably some room to grow.
You saw Microsoft's planning to, or just unveiled, did you see this? This foldable smartphone, as if they're getting back into the smartphone business using the Android platform?
Well, that's it. I think that Windows as an operating system for cell phones was a failure. There really wasn't room for another player in that duopoly. If you really want to control your consumer, you have to control where their eyeballs go first, and Microsoft's trying to do that. I'll concentrate more on what they're doing from a web services standpoint, from a business services standpoint. That's really always been their strength. So I'd like to see them continue to concentrate on delivering that to business consumers.
If you get on Microsoft or Google, what do you think right now?
Well, we own Microsoft. We own a little bit of Google. It's hard to look at the internet and not say that the tailwinds of more online services, more online advertising aren't there, regardless of the noise generated by Washington. So hard to bet against these companies on a 2, 3, 5 year basis.